as we continue on into this amazing week of earnings. We have Coca-Cola, who reported earnings yesterday in the morning pre-market. Let's take a look at how they did. Obviously, as you see, throughout the day they ended up 3% for the day, so that's a pretty big move for a company like Coca-Cola. Not necessarily a stock known for that kind of movement. You don't necessarily see big movements for that, so we're going to go ahead and see what exactly happened that could have caused this. So let's just look at the numbers real quick, then we'll get into some of the details. So earnings per share in line on a GAAP perspective or a non-GAAP perspective. EPS on a GAAP perspective beat by 3 cents. So not a whole lot of profit going on in this company, which is something to consider. Revenue though of 9.1 billion, which is a 16% increase year over year, beats by 220 million. Now that is a very big number for you. 16% growth. That is really what I want to highlight right off the bat. As far as Coca-Cola, and I think it's why the stock's gone up a little bit. I did want to mention too, as far as this price is concerned, I think it's a little absurd. We're in a market in which Coca-Cola is trading at a forward PE of 26. It's very high for a company of that, of that caliber, of that type. It's a super long-standing value stock. It's not necessarily supposed to be something that's getting valued with a PE of that, that massive. So that's something to consider as well. I wanted to though show you what's kind of good about this company and why I think it's starting to trade a little bit higher on that valuation perspective. So if you're looking at the history of this thing's revenue, Coca-Cola has been just flat to negative for a good solid 4 years now, at least 4 years, which it is consistent. This is just consistent quarterly revenue decrease. The only time they posted one positive quarter in this span from 2013 actually, all the way up until December of 2018. So the fact that they're putting positive quarters year over year is good, and you can see it in this chart here. Trailing 12-month revenue obviously was very nice back here in 2012, and it's definitely tapered off quite a bit to where now it's around 33.55 billion. That number should go up now as of this latest earnings report, but overall, I mean, you see a little bit of a movement to growth again, which is definitely key for them. I think that's gotten a little bit more investors involved in this stock. I mean, they have a lot going on for them. If you think about it, we'll get into some of their product mix in just a little bit, but mostly part of this is just the decrease in people that really drink soda as much anymore. So it's understandable why you might see a little bit of a decrease. Let's look at some of the details, then we'll look into the report they posted. So Coca-Cola reports organic revenue growth of 7% in Q4 to sail past the consensus of 5%. So right now, the organic sales is really making this company. That's the goal of what they're trying to grow, because it's more of the future of these beverage companies. They're gonna want sustainable organic drinks. That's really just what people are all about right now. The health craze is out of control. Everyone's very environmentally conscious, so organic is definitely in right now. So that's why they've been trying to grow this number, and they've been doing a pretty good job at bringing in some new products that help boost that growth. So the revenue growth for the quarter was driven by concentrate sales growth of 2% and price mix growth of 5%. Organic revenue was up 26% in Latin Americas and 8% in Asia Pacific. Operating margin was flat at 24.8%. The company says it will continue to gain value share in total non-alcoholic ready-to-drink beverages, so that's good for them. Looking ahead, Coca-Cola anticipates fiscal year 20 revenue growth of 5%, so a pretty decent revenue growth from a perspective of Coca-Cola, which again 5% doesn't seem like much, but it's a company that has been just stagnant and has been really decreasing if you look at it over the past few years. So overall, growth is a good thing for them. EPS of $2.25 a share versus the $2.10 consensus. So it's a good, very good. Very good beat over the estimates of guidance as well. So that's a good thing for the stock as well. So free cash flow around $8 billion is expected. So they need that cash obviously for dividend payments, because obviously one of the longest standing dividend giants. I mean, these guys are the dividend king, paying dividends for 50 years, increasing them every year. That's what it's all about. So let's get into some of these fine details. Net revenues grew 16% for the quarter and 9% for the full year. Organic revenues grew 7% for the quarter and 6% for the full year. So good. That's a good number. Operating income grew 19% for the quarter and 10% for the full year. That is a lovely, lovely number. You know I love profitability, and the fact that they grew operating income is lovely. Neutral operating income grew 23% for the quarter and 13% for the full year. Fourth quarter EPS grew 134% to 47 cents per share. And comparable EPS grew 1%. So again, that's a little bit different. And full year grew 38% to $2.07 versus comparable of $2.11. So that's cool. Cool stuff. So cash from operations was $10.5 billion, which was up 37%. Very good for that. Full cash flow was $8.4 billion, up 38%. Love that. I love everything about that. So let's just look at some of the highlights. Obviously here, I wish they had posted slides. We don't get all the lovely charts. So we're just gonna go ahead and talk about some of the highlights that they have for them. Obviously, with revenues growing 16% to $9.1 billion and 9% to $37.3 billion for the full year. Organic revenues grew 7%. One additional day, which resulted in approximately 1 point benefit of revenue growth. So obviously 1 extra day in their quarter. So again, a little bit extra boost for them. Revenue growth for the year was driven by concentrate sales, and there you go. Operating margin, which included items impacting comparability, was 23.9 versus 23.4, so it had a little increase in margin. Good for them. EPS, obviously big increase there. So as far as gaining share of total portfolio, in 2019 the company continued to grow its total portfolio, which led to the largest value share gain in almost a decade for them, which with contributions from both sparkling and non-sparkling offerings. In sparkling, trademark Coca-Cola grew 6% retail value globally as they continue to scale innovative offerings such as Coca-Cola Plus Coffee, now available in more than 40 markets. Coca-Cola Zero Sugar continued to expand its footprint, achieving a full year double-digit volume increase, and its non-sparkling portfolio, Innocent, one of the company's juice and smoothie brands, continue to perform well, led by innovative products such as Innocent Plus, a premium juice with added vitamins. So good for them. Innocent brand scaled beyond its flagship market of Europe, launching in Japan during 2019. Good for them, expanding some of their non-carbonated beverage brands too. It's important for them as a beverage company. They really need to expand, and they have a good portfolio right now in terms of beverages. So packaging remains an ongoing focus. This is another big portion for them. There were many examples of advances during the year. Bottles made from 100% recycling PET were available in 12 markets. Coca-Cola Sweden announced it would be the first market in the world to transition to 100% rPET, recycled PETs. No, I'm just kidding. It's not PETs. I'm just kidding. For all plastic bottles made in the country. So good for them. In the United States, the company leaned with partners and major competitors to launch the Every Bottle Back program during the fourth quarter, which is really meant for people to return the bottles after they're done with it. So that way they don't just throw them away. So good for them. Coca-Cola has teamed with the industry counterparts to reduce the amount of calories Americans consumed. The Balanced Calories Initiative, launched in 2014, is the single largest voluntary effort by the industry to help fight obesity, and they did that with such things as their smaller mini cans and smaller packaging options. So good for them. Good for them. So that's obviously what they have going on. As far as their brand is concerned, there's some important stuff. Obviously, sparkling soft drinks grew 3%. Love that. Driven by growth in China, Brazil, and Southeast Asia. Good for sparkling growth. Juice and dairy and plant-based beverages was even on the quarter. Strong performance by chai in West Africa, and innocent juice in Europe was offset by a decline in rainy in the Middle East. Water, enhanced water and sports drink grew 2%. Tea and coffee grew 4% in the quarter. Good for them. As far as what else we would like to see, let's go ahead and look at obviously Goodall. We looked at their outlook prior, which is anticipating a 7% increase in EPS, which is good. Other than that, we want to look at obviously some charts here. Just a couple things. We're going to look at cash and cash equivalents. So you see, obviously, they have a decrease in cash and cash equivalents compared to what they had last year. Right around $2.5 billion less than what they had last year. So that's not what we like to see typically. I like to see increasing, but I understand. Total current assets of $20 billion, which is less than what they had a year ago. Total assets in total of 86. 86 below. Current liabilities, accounts payable of $10 billion, which is again more than that current assets in terms of cash, which I don't know if I like. Long-term debt, they've got $27 billion sitting there, which I am not a huge fan of either, but the company's fine in terms of that. Their balance sheet doesn't scare me all that much. No worries there. That's really all I want to look at for this company. It's not necessarily a stock that I consider to be a buy at these levels. I think the levels are just a little bit high, but I think they're really working on shifting this company back into growth from their declines over the past 5 years, and I respect it. So pretty good earnings for Coca-Cola. They did a good job, so they just need to keep it up, and I'm going to just soak up the dividend in the meantime. Thank you.